Welcome to Wealth Wisdom. If you have ambitions to achieve financial success, please leave yes in the comment, and we are here to help you obtain insight and build wealth. The book we are going to share today is Narrative and Numbers by Aswath Damodaran. Create compelling brand stories and true business valuations. How do startups with no profits seduce investors with their potential? And what makes a company like Amazon more valuable than its physical assets? The secret lies in the stories these companies tell, narratives that promise future innovation, market dominance, or revolutionary business models. In this sharing, you'll learn how financial stories drive investment and shape views of a company's worth. You'll also see how the valuation process converts stories into actual data, how risk factors into investment decisions, and why understanding this process is crucial for anybody trying to make wise investments or grow a business. Whether you're a seasoned investor, a budding entrepreneur, or simply curious about how companies are valued, you'll gain useful insights that could pay dividends in the future. Before we continue, if you are interested in this topic, please consider subscribing and give us a thumb up. Let's continue. When story and data collide. In the business world, two distinct players vie for dominance, the storytellers and the number crunchers. While financial figures often take the spotlight, the fact is that true company evaluation involves a mix of numbers and storytelling. Let's look at the storytellers first. They're the ones who give meaning to the numbers, framing them with context. Consider Ferrari as an example. No one views the prancing horse as an aggregate of earnings. They view the brand as a story about luxury, speed, and craftsmanship. But watch out, this doesn't mean that a successful company is all story. A story without numbers can drift into fiction, just as numbers devoid of a narrative can be misleading. We need storytellers and number crunchers. As a business evolves, so does the interplay between its narrative and numbers. Early on, a compelling vision can attract investment and talent, but as a company matures, its financial realities take center stage. So, when evaluating a business, we need to consider both the storytellers and number crunchers. Narratives provide context, whereas data provides precision. Together, they weave a tapestry of the company's present state and its possible future state that neither can convey on their own. Let's go a little deeper. Why your business needs a compelling story. For millennia, storytelling has informed, persuaded, and sold ideas, and it still has a strong influence in the business world today. This is no accident, after all. Our brains are hardwired for narrative, making stories a formidable business tool for persuasion and connection. Story was largely responsible for Amazon's meteoric rise. Rather than just selling books, they saw themselves as the world's most customer-focused company. Their narrative captivated both investors and customers, transforming a small online bookstore into a global retail giant. Stories not only remove data clutter but also humanize abstract figures, turning spreadsheets into stories of ambition, risk, and opportunity. All advertising campaigns, educational endeavors, and investment proposals rely on storytelling. The challenge lies in ensuring these stories don't succumb to bias or manipulation, as was the case with the Theranos scandal, where a gripping narrative overshadowed the non-existence of the technology being offered. So how do you incorporate a story into your own business image? The trick is to aim for a storytelling approach that is as disciplined as it is creative. Find that sweet spot where a compelling narrative meets sure-footed realism, ensuring that your business's story is not just heard but believed and respected. Let's find out how. A good story shows your brand's value and vision. Do you remember Apple's Think Different promotion, the one they used at the turn of the millennium? This approach kept the brand's values center stage while infusing it with the innovative spirit of people like Einstein and Gandhi. They made a generation of people think of them as creative and ahead of the curve. Now, is your brand story told with the same depth and clarity? The story you tell should be equally credible and inspiring, and it should be based on extensive research of your company, its market, and its competitors. Stories are memorable because they're based on common experiences. Traditional plots such as overcoming the monster or rags to riches have become patterns embedded in our collective consciousness. By reflecting on these story arcs, you can forge a deeper connection with your audience. Look at your company's challenges and successes. Which universal plot best describes your journey? Adapt it to your narrative to build a brand story that feels both unique and familiar. Now, at the heart of every compelling business narrative is a keen understanding of the brand's identity and its audience's expectations. How can you harness the power of your company's figures to tell a story that shows value? You'll need to marshal facts and be specific. Let your customers see the value you create by showing rather than telling them about your company's impact. A good business story is simple yet profound. It's credible, authentic, and connects on an emotional level. While structure and types provide a blueprint, business storytelling must be based in reality. It must include facts and critique to avoid wishful thinking. So make sure to relate and compare your story to your numbers. And try to keep your narrative as dynamic and innovative as your company. Because a well-crafted story not only defines your brand, it shapes its future. Use business data wisely to avoid bias and overconfidence. Now that we've looked at storytelling, let's look at numbers. With objective data points and metrics, numbers provide the clarity decision-makers crave. But here's the issue: though numbers can be used to eliminate biases, they also carry their own. So often, they only give you the illusion of certainty and control. Data is often seen as the modern business protagonist, promising perfection at every turn. But as every seasoned leader knows, data is only as good as its interpretation. Numbers must be understood as well as computed. They should also be questioned, with their assumptions laid bare, to reveal the true story they're trying to tell. After all, numbers are collected, curated, and presented through human lenses. By being vigilant about the potential for bias and the false confidence numbers can give, savvy leaders can prevent mistakes. So, rather than relying on numbers as a crutch, we must assess the flaws in any numerical presentation and seek the reality behind the figures. But what kind of figures are we talking about? There are many, but two important ones are the discount rate and terminal value. A discount rate is used for valuing a company's future cash flow. It accounts for market-required returns, risk, and investment opportunity costs, but projections don't just look at the near future, they also look at how profitable a company will be in the long run. This is where the terminal value comes into play, which is a way to look beyond a business's future cash flow and make a prediction about its value in the indefinite, long-term future. Establishing terminal value requires an equal mix of optimism and fact to prevent inflating or undervaluing prices. Making business decisions based on numbers requires careful thought. You should consider both the hard data and the story behind it. This means seeing each number not as a solitary point, but as part of a bigger picture that reveals details about the company's future and market position. Use your business story to inspire investor action. Why does one business narrative thrive while others fall flat? The secret lies in the simplicity of the story. A compelling business narrative should be stripped down to its essence, making it easy for investors and customers alike to understand and get behind. There are 5 kinds of business stories: vision, opportunity, turnaround, growth, and entrepreneurial. With the right kind of business narrative, you can inspire investors, boost employee morale, and pique the interest of customers. Before penning your first chapter, there's homework to be done. As a brand creator, you must scrutinize your company's past, the current market conditions, and direct competitors to create a narrative that's as informed as it is inspiring. This narrative should form the backbone of your business's identity, crafting a tale that's both expansive in its vision and specific in its details. Take Uber in 2014. Their story is about an urban car service that grew into a global mobility network. Alibaba, too, tells a grand story, not merely of e-commerce, but of capturing and capitalizing on China's incredible economic growth. Once the brand creator has established the narrative, the investor steps in to translate this story into a valuation. The investor's role is to examine and enrich the narrative while also acting as a builder and caretaker. How do investors ensure the story is structurally sound? By analyzing each part to ensure it's reflective of market realities. Remember, a good business story is alive, evolving with feedback and real-world results that continually test its strength. A great story finds the right balance between reality and inspiration, connecting the storyteller and the audience in a shared pursuit of value. So what are your next steps? Begin by defining your core narrative. Ensure it resonates, yet remains open to evolving as your company matures. Keep it flexible to incorporate feedback and adapt to changing conditions. And remember, whether big or small, your narrative's vision must align with reality to inspire action and drive value. Use the 3 Ps to validate business stories. When you hear a business story that seems too good to be true, it might just be. So, how can you make sure that a narrative is trustworthy? Enter the 3 Ps: possibility, plausibility, and probability. Some business plans read like they were written by J.K. Rowling rather than Warren Buffett. Study the possibility of the narrative. This means weeding out the impossible, reject any vision that defies market sizes or carries false profit margins. These are the business world's make-believe stories, captivating but critically flawed, but the test doesn't end at weeding out the impossible. Sometimes, a story is so finely spun that it teeters on the edge of credibility. It might capture our imagination, but does it hold water? Here, we question its plausibility. How do we know where optimism ends and overestimation begins? Imagine that Alibaba is seeking to leverage its Chinese dominance to expand globally while maintaining profit margins of 50% or higher. Imagine also that it claims it can fund this expansion primarily through existing cash flows, without major acquisitions or investments to enter new markets. This would allow massively increased revenues while maintaining constant margins and investment. Sounds fantastic. But can a business really conquer global markets while maintaining high profit margins purely through existing cash flows? Entering new markets often involves substantial spending and accepting lower profitability in order to win market share. So, once you dig deeper into the story, you'll notice that its plausibility is called into question. Here, the discount rate we talked about earlier becomes a crucial factor in assessing the story's financial credibility. And now what about probability? Tales of high growth paired with low risk are seductive, but they require a reality check. Ask yourself, is there a solid strategy supporting the growth claims? Are the financials viable? Improbable stories may be quantifiable, but essential parts may not make sense when assessed objectively. As a result, investors must ensure that numbers backing up a story are consistent with both the market and common sense. The projection must be credible and justified to hold up as part of the company's worth. Creating a compelling business narrative involves more than just telling a story. It involves showing its value and relevance in the real world. Start by verifying that your goal is grounded, and then check with professionals to confirm it's achievable. Subject your story to probing questions to spot weak premises and refine it until it is both clear and supported by solid strategy and finances. By carefully applying the tests of possibility, plausibility, and probability, your company's story becomes compelling and resilient in the face of market scrutiny. Stories that are rooted in realism and bolstered by data build trust and add value to your brand. It's vital to assess these stories for plausibility, possibility, and probability in order to gain personal insight and make better business decisions. What's more, as market conditions and strategy shift, the narrative must adapt in order to keep its relevance and impact. Accurate forecasting, such as estimating terminal value and using discount rates, requires cautious use of data to avoid bias and overestimation. Finally, a company's story is never complete. Data must be collected on a regular basis to keep investors, buyers, and the broader market interested. That's the end of today's sharing. If you like our content, please give us a thumb up and share it with your friends. See you next time.